G'day guys, in this video, I'm going to have a look at Bitcoin and the total market cap when compared against other major significant flash crashes. Going to use the COVID March 9 week where we saw Bitcoin decline something like 30 odd percent, at one stage 40% in a single day, to see if we can gather anything from it. Let's look at what is and move away from the emotions of what could be and what people think. Starting here with Bitcoin, let's go back and have a look at that day. It was actually that week. Now, Bitcoin here on that day, on that particular week, closed down 33.45% in what was just a wild day. I remember it very clearly, down 50% at one stage. It was a full-on skies falling moment. And, we went through a couple of wild years, a wild year certainly with COVID and whatnot that went around that. Now, from that flash crash, we did see 7 weeks it took for Bitcoin to recover back to around the levels that it was before that COVID flash crash. And as you'll see, we then consolidated, we pushed through, we retested the breakout, and then we got a very, very strong bull run. Now, of course, things have changed in the industry. This was mostly all led by retail, this last bull run. It was retail, it was me and you in the market. There wasn't massive liquidity from ETFs. There wasn't big companies buying up Bitcoin as a treasury play. I think Saylor might have started then. I can't remember if it was 2020 or 2021. Either way, we weren't sitting in the same place as what we are right now. And in the light of keeping it factual, I want to cover a couple of things that I put in my free newsletter this week, where I do try and cut the noise and focus on news, momentum, and then I look at the charts as well. A couple of things that I wanted to speak to you about, I've got it written down here, is some of the recent regulations out of the US. Now, you've got to remember that during that last bull run, the US was basically saying Bitcoin bad, crypto bad, you do it, it's bad, you're in trouble. And they were actively pursuing cases against the likes of Ripple, against the likes of many different companies. And it was a very difficult place. Coinbase got sued, of course, all of that was dropped. CZ, it was a real attack squad with Gensler and the Biden administration against crypto. Now, we're seeing the opposite of that right now with the current administration, which is an openness and a willingness and a desire to make the USA a crypto country, which is very open for business. And that's what they're looking to do. Recent cryptocurrency regulations in the US is the Genesis Act. We've spoken about that before. I'm sure you're aware of that. The Clarity Act, which transfers non-security crypto oversight to the CFTC, clarifying rules for exchanges and brokers. Clarity is the big word there. CBDC Anti-Surveillance Act bans retail and leverage. Bans retail CBDCs without Congress boosting private crypto like stablecoins. SEC CFTC guidance allows spot crypto trading and leverage products on registered exchanges with surveillance. SEC Crypto Task Force defines what's a security and what is not a security, which we saw with the Lido and staking and that sort of thing being not a security for Ethereum and whatnot. State and federal updates for the stablecoin Pro Crypto in Texas, so on and so forth. Now, we're also seeing globally this sort of trend catch on. US stablecoin framework with the Genesis Act, of course, we spoke about that. We're seeing ETFs, 90 plus ETFs on regulated platforms, bringing a level of legitimacy to Bitcoin and cryptocurrency. US pro-innovation shift, so the reappealing SARB 121 and digital asset group foster bank custody and DeFi TradeFi integration, meaning banks and financial institutions are now being welcomed into the space more openly. MiCard, which again is 27 nations regulating stablecoins and crypto and whatnot. UK has opened up regulation again with crypto coming into it. Japan licensing are the third largest economy in the world, and it goes on and on and on. Of course, the UAE a big player there as well, and I call that probably the crypto hub is in the UAE, Dubai at the minute, whilst America tries to scramble to get things going. So we've seen a flash crash before, and we saw a massive move after a flash crash. Does that mean it's going to happen this time? And does it mean that the cycle is now broken? Well, I don't think so. I think it's let me rephrase that. The cycles have not gone the way they have in the past, and I think it's largely because retail haven't played as big a part with the market caps the way they are. We've seen institutional money flows come in, and we haven't seen the same desire to buy your altcoins. And many people are seeing that. Those that hold Bitcoin have mostly done the best. There are the exceptions to the rule, of course, but as a whole, that is the the reality. It's the facts. Now, what we're seeing of last week when we saw that big flash crash, we ended up closing down 6.85%. Now, given what I just said to you about all these regulations and whatnot, I mean, you've got Eric Trump saying the next 75 days are going to be incredibly bullish for Bitcoin. You've got Trump wanting to do more on it. We've literally got the US not just trying, but bending over backwards to regulate and create a framework of certainty within the markets, which will then bring in more institutional money. Institutional money has carried us to where we are this cycle. Okay, the things like the ETFs and the micro strategies and the Bitmains and all these Bitcoin treasury companies have been behind this move. But it's just a trickle of the global capital that is available out there. And for anyone who's keeping an eye on global monetary supply, you'll see it continues to creep up. And gold's caught up to the M2 money supply. Bitcoin tends to do the same. It's just a matter of time. And while I look at Bitcoin's chart right now, I see a clear monthly uptrend. And this is the thing that most people don't do. They don't zoom out and they don't have a long enough or big enough perspective on the market. They're looking at trading. They see the market dip down, they look at the daily and they go, ooh, it looks ugly. And you'd be right. Highly volatile. And there's a probability, a decent probability, that we fall below 100,000 on Bitcoin. But just knowing that is going to make it easier to weather that storm. I believe that we will see major capital inflows into Bitcoin and into the crypto market in the coming months and years. I really do. I think the framework that's being laid out, which is just factual, which is what I just stated to you and which is what I share in my free newsletter each week, it's less about the emotion of your favorite influencer who's throwing his toys out of the pram because the market's not going up. Or they had a few bad trades. It's about what's actually going on at a core level. What is being built around Bitcoin and cryptocurrency? What the legislation coming is, and what does it actually mean? Now, for most people, they've only just gotten into trading and investing. Crypto might be your first port of call, which is a very strange place to start. It's a very good place to start, but it comes with a huge amount of emotion, where experts seem to be the people that have a picture of a gorilla on their X profile. These are not seasoned professional traders, ladies and gentlemen. These are people that are also tapped into the emotional side of the crypto market. But when you strip everything back, look at the bigger picture, the monthly chart on Bitcoin, and start to look at the legislative balance shift that we're seeing at the moment, I can't see anything but bullishness for Bitcoin. And it's not just me. You've got people like Michael Saylor. You've got many people around the world that are suggesting that we're going to see Bitcoin move much, much higher. If that institutional money can come in around off the back of some of that clarity in the regulatory framework that is being built in the US and discussed at the moment, we could see literally trillions flow into this market without too many issues at all. Now, whilst Bitcoin looks good on a monthly perspective, why do I think we could fall below 100? Well, have a look at each time we see these pull back into these moving averages. This is where I've built a 20-year trading career around. Back into these averages, everyone was very bearish here. This bull runs over. Same again over here. The bull runs over. Same again right here. I believe that we will have a high probability of pulling back deeper into this, cradle zone, which could get us down around $90,000. And I'd still be bullish on Bitcoin. Now, I'm a perma bull when it comes to long term, but I'm a trader when it comes to making an income. So with my trading, I'll trade what I see on the charts based on my trading strategies. And I'm looking at what trends are abound at the moment. And there's not a great deal of them on the timeframes that I like to trade. But as a bigger picture, for those of you who are holders out there, having a look at this Bitcoin chart, you'll see a very strong monthly trend. Don't be freaked out. Don't be too fearful if we do see it pull back further. Markets go up and markets go down, just the same as you breathe in and you breathe out. Having a good handle on what's going on, understanding what you're looking at, makes it a lot easier to go through these periods, because you probably went through a highly emotional period here, like many did. But then we got this. So what if we do see Bitcoin go to $250,000 by the end of the year and you're freaking out the whole way it pulls back, say, to 90? Well, it'll be a waste of emotion and a waste of time. Now, I'm not saying that you shouldn't act upon what you see. I'm saying do it without the emotion. Now, coming across to look at the total market cap here as well, again, this is capturing the entire market cap. Of course, it is heavily weighted to Bitcoin because Bitcoin is the largest of the market caps. Then you've got the rest of the top 10 that makes it the majority of this total market cap. As you can see, the others is only worth 247 billion, which is everything outside of the top 10, and the total is 3.63 trillion. So the majority, the lion's share of the top 10 are in fact the top 10 here with Bitcoin included. So it's no surprise to see that this trend is also very valid and very strong. Could it pull back? Absolutely. It could get into $3 trillion without too many issues and still be a strong monthly trend. So that's my stance, bringing some facts to the market so that you can really see what is going on and not be driven so much by emotion. It's an incredibly powerful thing to be able to do this. The only way you're going to be able to do this is by knowing what to look for, knowing where to find your information, and knowing how to understand what that information means. Whilst you want to get rich today, put the work in and see what you can achieve in the next 3 to 5 years, because that's where the real gains are going to be made. So be patient, take a breather, and make sure you're on my free newsletter where I do put this out every single Tuesday to give you the facts and the numbers and how I'm reading the market. Have yourself a ripper day, and I'll speak to you soon. Relax. Bye for now.